President and CEO of Hoffman Equipment in Piscataway, New Jersey. Hoffman Equipment is a full-service authorized dealer of heavy lifting and construction equipment. Mr. Waters is testifying on behalf of Associate Equipment Distributors. AED has 700 distributor member companies and accounts for over $15 billion of annual sales. Welcome.
Good afternoon, Chairman Velasquez, Ranking Member Graves, and other distinguished members of the panel. We are a family-owned business headquartered in Piscataway, New Jersey. We sell, rent, and service construction equipment. We represent about 10 different manufacturers, including Case, Terex, Grove, Manitowoc, and Doosan. We employ about 75 people from 5 locations in New York and New Jersey. And just as an aside, Madam Chairwoman, our service territory includes the 12th Congressional District of New York. We also have an export department, and about 20% of our volume is export-related of U.S. equipment and parts. As you mentioned, I serve on the AED board. AED is a national association of authorized independent distributors for construction, mining, forestry, and agricultural equipment. And the vast majority of AED's members are small, locally owned family businesses such as mine. There are 3 ways the current credit crisis is hurting our industry. First is that as a distributor, my own cost of borrowing is increasing, and in some cases, credit may even be unavailable. Access to capital is critical to our industry. Distributors such as myself borrow money to finance equipment in our inventories and rental fleets, and to operate our companies on a day-to-day basis. We generally utilize large banks and finance companies as sources for this lending. Continued access to credit from sources such as these is absolutely necessary for our industry to exist, and the current crisis has made it difficult, increasingly difficult, for dealers such as myself to find this capital. The second way the crisis has hurt our industry is that our customers and the developers they work for cannot find financing for their jobs. You are all well aware of the current condition of the residential construction market. Essentially, it's dead, and the commercial construction is slowing as well. Since developers cannot finance their projects, our customers have no work and so need no machinery, and we therefore have no business. The lack of credit creates a chain of events, painful events I might add, that ultimately lead to decreased business and employment throughout our entire industry. The third way the credit crisis has impacted our industry is that we are unable to finance our customers' retail transactions. Contractors themselves rely heavily on credit when purchasing equipment. The most common sources of credit here, again, are finance companies and banks. These banks and finance companies have made access to their credit resources unavailable, or in the rare case when they're willing to finance a transaction, exceedingly expensive. So, the net result is, if we as a distributor are lucky enough to find a customer that has work and is actually willing to purchase a new machine, we then have difficulty to find them the financing to make the transaction possible. In April, AED conducted a member survey to clarify what impact the credit crisis was having on our industry. The findings paint an ugly picture. 81% of our respondents reported they had lost sales in the last year because qualified purchasers had been unable to get financing. 56% of distributors reported an increase in their own credit costs, and 44% of respondents said their companies had difficulty securing credit. The findings illustrate that the lack of access to capital is undermining equipment markets and increasing the cost of doing business for equipment distributors. The impact of all this on our markets has been staggering. In some regions of the country, the market for new equipment sales has fallen by as much as 85% from peak levels in 2006. Our own company has experienced sales this year less than 50% of what we sold just last year. We have responded to this drop in business volume with layoffs and cutbacks of every type we can make, and we are still hanging on, just hoping to survive this mess. Having said all this, I think there are some things that Congress and the executive branch can do to help ease our pain. First, Congress should put new multi-year authorization laws in place for federal highway, sewer, and drinking water infrastructure programs and dramatically increase investment in these areas. We need to create infrastructure construction activity. Investing in our infrastructure speeds economic recovery, will help address the staggering 19% unemployment rate in construction workers, and restore lending confidence in our industry. This will also create demand for the thousands of products that are consumed on a typical construction project, including equipment sold by firms such as mine. Second, The SBA should be directed to work with finance companies and banks serving our industry to develop loan products that meet our unique needs. SBA should also re-examine its size standards to determine whether they are preventing companies that otherwise fit the definition of small business from benefiting from SBA programs. Once construction industry-specific programs are in place, SBA should be encouraged to undertake aggressive outreach to lenders, contractors, and distributors. And finally, I'll go quick, Congress and the executive branch should continue to work to improve access to capital for the finance companies that serve all American industry. Because in spite of what the banks were saying earlier, which they all are continuing to lend at previous rates, that's not what we are seeing from the business side of things. Thank you.